Hello, trading has closed on May 28th, 2024. We always begin with our disclaimer. We go over our calls and then make our predictions. This is my trading plan for Wednesday, which is May 29th, 2024. Please remember my calls can be wrong. Trade at your own risk. Also remember that I have a lot of personal business this month. I think it'll extend into next month. I just can't watch the market all day, and I may not even risk any of my own money on these calls. And ignore the noise in the background. Those are my granddaughters. Well, we had a few calls. We looked for the pattern with the early high. It tends to have an early high and a late low. That's what this is. Tomorrow should also have the early high. We said the commonest thing was the gap and prompt move outside of Friday's range. We certainly got that. Next most common was the close little change. Then we did that too. And usually when that happens, the next day has a big move. So this is what we said. We said that Friday's trade was negative, but if we gap and promptly overtook Friday's high, that vitiates negative implications of the move. That's what happened. We said it was quite possible because we had a Bollinger Band reversal buy signal. Now we got the most common thing after mixed signals, which is a gap and prompt move outside the day's range. And since we got that, we don't have to have anything else. But we did get a close little changed. And even though this doesn't have to go to fulfillment because we already satisfied my rules, usually it happens anyway, even though it doesn't have to. So usually tomorrow has a big move. Now these are the patterns we're seeing this week. Somebody sent me a private message wondering how I came up with these things, and I would reply to him privately. Somehow I lost the message. I don't know how. But the patterns repeat every 32 calendar days. This isn't my work. I got this by reading a comment in a chat room. I found out later it's on Bonnie Hill's website. I have said this a number of times, but no one watches every one of my videos, so just remember that the intraday change in trend times, with some leeway, tend to repeat every 32 calendar days. Also, if this is all you use to make your calls, I guarantee you're going to lose money. The change in trend times are helpful. The time moves in the direction you wanted to trade anyway. If all you use is the times and nothing else, you're just kidding yourself. It doesn't work. It just helps your time moves you in the direction you want to go anyway. So, all MEJT had to say today was this big drop here wasn't for keeps, that we were going to retrace, and that's already played out. So now we have to come up with a call for tomorrow. Well, we're going to start out by changing the degree of the waves I have here. Now the count I had this ABC as though it could have been A, blue A of green C, and it still might be. I mean, it doesn't break any rules if that's an A and we have a B and then a C, but I think it just makes for a clearer count. If we move the degrees up one, we're going to keep the degree of green C the same. And instead of this being an impulse to start wave B of C, we're just going to say it's the start of an impulse wave that has much higher to go before it's done. Now this pattern usually is a bearish pattern. And instead of being a bearish pattern, in spite of dropping and having every opportunity to keep dropping, we recovered and closed over all these intraday lows. Now as of right now, that's a bullish pattern, because the drop couldn't sustain itself. Now tomorrow's open can substitute for today's close. If we open down here, all that positivity goes away, And that's entirely possible because we have a rejection of the move to new highs, and we still haven't managed to close over any of these highs. So it should be resolved early in the day. If we're going to keep dropping, we should take this low out early, ideally by gapping under it. And if we can't do that, we're going to probably trade higher, but that's no guarantee we're going to close higher. So tomorrow's pattern has a yearly high. It doesn't tell us where we open. Today's normally bearish pattern couldn't close under midday lows, and if that's maintained at the open, it's a bullish pattern. Should lead to higher prices. Doesn't tell us where we close though. Bears need a gap and a prompt move under the low day to keep the rejection of the move to recent highs the dominant pattern. And the longer we go without reversing down, the less likely we're going to drop. Now, such a decline is not impossible, so the opening trade should be critical. My granddaughters think so too, apparently. There's a good chance we'll see a sizable move tomorrow, even though we don't really have to. We usually will. So it's a pattern with the early high. We think the opening trade is going to be critical. We have a rejection of the move to a new high, so if we keep dropping and take out this low, I have all kinds of lower targets. But there's really no reason why this pattern shouldn't have taken this lower, and the fact that it did not could mean that the bears just don't have what it takes. Now, time doesn't run out till early tomorrow. If we have the early high pattern, we open up down here, or gap either direction, take this out fast, we could still drop. But that hasn't happened yet, and I don't like to guess on these things. So we're looking for a very telling opening trade with a good likelihood of a big move. And if there's going to be a big move, I don't see any justification for taking a guess as to the direction when I think it'll be clear enough early on. So it's a pattern with the early high. Early trade should be telling, and that's today's call.